Holy smokers, folks, this ain't no dang jokers. We have so much to discuss in today's video. There's so many stocks I got to talk about, so many things in the market. I was just thinking to myself, like, I don't even know where to begin this video, but we're going to begin with Big Dog. We're going to begin with Tesla here, and we'll take it from there. A lot to get into. Thank you, every single person that subscribed to the channel. I appreciate y'all. Let's get straight into it here, okay? Tesla. Stock up big again here today, up another 5% plus, right? Congrats to all Tesla shareholders. Big day, okay? The stock keeps running and running and running. Why does it keep running? Because there's a lot of hype and excitement around Investor Day that's coming here, okay? And we are, a little over 24 hours away from Investor Day, okay? Now, everybody's excited about this and hyped about it. And I'm excited as well, but not from a standpoint of like, I got to go all in the stock before this Investor Day or something like that. I'm just excited to see whatever Elon and the team has to show off here, okay? But I think people are getting probably too excited about this Investor Day based upon kind of the stock price reaction. And I'll kind of speak about this in terms of what it means for the stock price after this Investor Day happens and the excitement kind of dies down there, right? Now, a lot of people are all talking about a Model 2. Like Tesla announcing a new product, okay? Now, as with all things in the stock market, it's a possibility. But what I can tell you is that's a long shot. Why the hell would Tesla announce a new game-changing vehicle at an Investor Day? That is so ghetto if they were to do that. That doesn't make any sense. It doesn't make any sense. Like Tesla's... Like Elon Musk knows way too much about branding, marketing, and advertising to release a new vehicle on an Investor Day. It just doesn't even make sense. And I see so many people talking about this. Oh, they're going to release this new vehicle. And I'm like, what are we talking about here, guys? Like, that doesn't make any sense. Elon is a master of showing off new products. He likes to have huge events where the media comes, everybody comes and checks it out. Not at an Investor Day. That's like Apple having an Investor Day and showing off the iPhone 15. Like, what? What are we talking about here, okay? And whenever Tesla does announce that particular product, right, the potential 25K Model 2 or whatever we want to call it, right, like, that's going to be one of the biggest things to have happened in a long time to autos, right? And so, yeah, like everybody's getting so excited about that, and I'm like, y'all just planning on getting let down because I can tell you, like, it's a possibility, but I would call it a very low possibility that they would show off a new vehicle. I'd be super disappointed if Elon and the team was like, oh yeah, we're going to launch the vehicle on Investor Day. Like, come on, man. That's just like, it's a possibility. We'll see what happens. I'm just saying, like, don't get your hopes up around that. And I'm afraid a lot of people are getting their hopes up around that, which brings us to the stock price and what's going to happen to the stock price after Investor Day, okay? So, what I believe is going to happen to the stock price after Investor Day happens is I believe there's a high probability that people will somehow be let down, okay? And, there's just so much hype and excitement. Maybe they do launch some game-changing thing that it's like, I can't believe Tesla's doing this, but I'm just like, I don't know why they would do that on Investor Day versus have an official event for that particular product or whatever, right? So if everybody's getting too excited about this situation and are kind of let down, I can see the stock potentially going back to like the 180 range in a scenario like that. A lot of people are wondering, does it get back down there? I don't know about getting back down there. And the reason it went down here, well, on top of just selling because everybody was panicking, right, was mainly because of demand. And people were so scared about demand. Well, as soon as Tesla cut price in China and in the United States as well, right, obviously we've seen a huge uptick in demand. So, to get it back down to $100, it's once again, as all things in the market, it's a possibility, but I call it a low probability. Because now at this point in time, we know Tesla has, very good and strong demand again. So that's been kind of de-risked out of the whole situation now at this point in time. But could it go back to 180? Sure, it could, okay? But yeah, that kind of covers Tesla there. I'm excited for the day, but just I think people are getting too excited about this and they're getting like way too FOMO-y around like what's going to happen here and getting so hyped about all these new products are going to be announced and things like that. And I'm like, hold your dang horses there, okay? No. Next up, Fubo. So Fubo reported earnings this morning, which if you don't know, it's basically, it's a super high risk, super high reward type of stock in the stock market, right? It's a streaming player, right? And it is a stock I personally own in one of my portfolios. And, there was I thought I would just go through these numbers with you guys to kind of show you the good and the bad, right? And I think we got to talk about the good and the bad. And I know some of you guys might own companies that maybe aren't profitable, right? And sometimes you're looking at their earnings report and you're trying to decipher like what's good, what's bad. it's very easy to go through Coca-Cola's income statement and judge if it's good or bad. Like, that's a piece of cake. When you talk about these stocks that are losing money at a particular time and are trying to change their business models to become a profitable company, it's a whole different game, okay? You need a whole different set of skills to kind of figure out that whole game, right? So in terms of revenue, super strong number, 38% growth on revenue. Very, very strong. And also, obviously, they got price increases coming for their customers. They did in January, February, so those haven't even been recorded into these numbers here. So very excited about that, right? Total operating expenses, I put this in yellow because I wouldn't call it great, but I wouldn't call it bad either, okay? It's not great because it's still, operating expenses still climbed 27%, but the one thing I will say is it climbed less than revenue, and that's something we definitely want to see play out there. Net loss, yeah, you can say it's a win in terms of like they're not losing a bunch more money than they lost in the same quarter last year, but at the end of the day, they're still losing a lot of money. And they have to reverse that in 2023. They're going to have to make huge strides in terms of their profitability and get this company into a much stronger, profit area. Doesn't mean they have to be profitable in 2023, but they need to bring down these losses substantially quarter after quarter after quarter as the year ticks on. So then these losses shrink to $70 million, $50 million, $30 million, $20 million, and then you can at least entertain the possibility of profitability in 2024, 2025, right? So they got to make good strides there. As far as net loss margin, obviously, huge, lot better position as far as net loss margin there, right? Up 1,127 basis points. As far as adjusted EBITDA, I put this in red because at the end of the day, still negative 3% in terms of adjusted EBITDA. That's something in 2023 they're going to have to make huge strides on there. Subscribers up 29%, that's good. Revenue up 36%, that's good. ARPU only up 4%, disappointing. I think that's because they have such a huge influx of worldwide subscribers, right, rest of the world, which are very low revenue numbers for that after that Molotov deal, but that was up 117% there, okay? So you got some good, you got some bad, you got some okay in regards to that, right? As far as guidance went, in North America, they're expecting 1.51 to 1.53 million subscribers. I like that they set their numbers a little more conservative. Like, the Google Trends for Fubo has just been kind of up and away for the past 5 years, but just, I'd rather them go in conservative and come and beat the numbers than, set the stock up for like these huge numbers and they come in and disappoint. Set it up conservative. Rest of the world expecting 395 million to 415 million subscribers as far as that goes. And obviously good growth in subscribers there. Now, in terms of cash, whenever you're looking at a money-losing company, and even if you're in a money-making company, as far as their bottom line, you still always need to look at what's the cash, what's the debts, and those sorts of things. As far as cash, right, this company's not really in any desperate financial jeopardy right now. They could be if they don't reverse these losses as 2023 and start bringing these losses down as the year ticks on. But in terms of money, they got a lot of money around, okay? $337 million of cash and cash equivalents. That was at the end of this year. But I went through their SEC filings, and I just found something very intriguing in their SEC filings here. And this is why it pays to kind of, especially if you got money in a stock, and this is not a big position for me. I might have 25,000 shares of stock. That's like, for me, that's a relatively small position, right? But still, I'm going to look through some SEC filings and see what I find, right? And this is what I found here, okay? On February 27, 2023, the company sold approximately 36.7 million shares of its common stock and for an aggregate gross proceeds of $68 million in block trades to multiple investors under the company's at-market program. The shares were sold at negotiated prices to the closing price of the common stock on the New York Stock Exchange on February 24, 2023. The sales were made pursuant to the ATM program sales agreement dated August 4th, 2022. Okay? Now, this is intriguing. So now they're going to have another influx of cash here on the balance sheet, which is going to put them obviously in a stronger position, but they just had to dilute shareholder value, which I'm sure shareholders don't like, right? But at the end of the day, for a company like this, it's about survival, right? It's about surviving this year, getting this company to hopefully profitability and get these losses way, way down. Because then once the losses are way, way down, you're not taking a $100 million loss a quarter, then everybody starts to look at subscriber growth, revenue growth, long-term opportunity, and can focus on that. In this market right now, with interest rates being so high, with it being such a risk-off market, people are very concerned about bankruptcy, right? Are very concerned about the losses you're taking. And so this gives them a lot of breathing room here to have time now to play out, where they can hopefully bring down those losses smaller and smaller and smaller as time ticks on, okay? Elf on a shelf up again here today. This stock just continues to show strength on strength on strength on strength, right? And it has outperformed Tesla stock for me over time. I went to a few Ulta stores this weekend. I was curious and wanted to see kind of what's going on in terms of Elf specifically in Ulta stores. And I mean, look at this beautiful sections in Elf. I mean, I still remember when Elf was almost non-existent in Ulta stores, especially when I was first getting in the stock. Like if they had a presence in Ulta, it was a super small presence. And to see the sections this company has now at this point in time in these Ulta stores is absolutely amazing to see this, right? This was another Ulta store here with the beauty kind of area there and the skincare area. I mean, it's amazing to see. It's amazing to see like the progress that company's made. And the other interesting thing about Elf, and I don't know if you guys knew this or not, and I know a lot of you, people, like 90% of the people that watch my channel are men, and you guys don't know anything about beauty, you don't know anything about makeup. And, let me just tell you a little something, okay? Elf has one of the most popular products on the market right now. This is insanely popular, okay? To give you some reference, I went to Amazon's bestsellers, okay? This is for foundation primers. Elf has the number 2, the number 4, and the number 6 most popular foundation primers out there. Okay, that's incredible. Now, Elf has a ton of super popular products, but I just want to show you how much they dominate foundation primers category here, which is, if you're really going to do your makeup, this is absolutely key. If you take a peek at this, okay, Elf has 8 of the top 15 primers on Amazon, okay, 8 of the top 15. I mean, this company is starting to just dominate in the cosmetics area. And I can only imagine where they're going to be 3 years out, 5 years out, 7 years out with this brand, with their dominance. I mean, I wouldn't be surprised if they're the most dominant player in almost every single area of cosmetics for more affordable brands. It's absolutely amazing. And you think with the low price points that Elf charges, $9, $10, $7, $8 for a lot of their products, you would think this company has to have bad margins. But go ahead and take a peek at Elf's margins, and you will see some of the highest margins you've ever seen in your life for any company. For any company. Their margins are astronomically high, and they've been getting higher and higher and higher, which is insane for a company that charges, pretty low amounts of money for their cosmetics versus other companies. For Elf versus other cosmetics companies, I mean, it can be a fraction of the cost. Many cosmetics from, let's call it the higher end players, you're looking at $50, $100 for some of their products versus Elf. Almost all Elf's products are under 20, and many of them are under $10, man. Absolutely extraordinary. And so Elf's just one of these companies that just is just running on the highest level possible, right? And, to back it up, prior to when I got in the stock, the company was in a bad place, a very bad place. The stock price was getting absolutely wrecked, 70+% prior to me getting in the stock, right? And this was a company that their revenues were trending the wrong way. Their margins weren't looking good. They were losing money. It was ugly on every front for Elf. And I saw a company that I believed in 2019 was going to start to change the business model, and revenues were going to start to trend up again. Margins were going to improve. Losses were going to improve. Everything across the board was going to improve for Elf, right? And everything I saw coming for that company, obviously played out. And 2019 was the turning point for Elf. In that year, the stock did very good. It was an 80+% gain from where it started the year to by the time that the year ended. But that was just a start, right? And obviously they just kept the pedal to the metal, and they just kept improving the business and improving the business. But that time period, when I was first investing in the stock, it was a very important time period because that marked the change for this company. And when you can start to show growth in revenues, margins, profitability, all those sorts of things, your cash flows start going the right way, it's a huge, huge dynamic for the company. And I believe, I'm 100% convinced that Honest in 2023 is going to do what Elf did in 2019, and it's going to start to show improvement on every single metric front. Revenue, margins, profitability, cash flow, and everything will start trending in the right direction for Honest, and a lot of people will look at the stock and just be like, oh, they're clearly on the right track now at this point in time, and people will start to flock to the stock. Investors, hedge funds will start to flock to the stock as the financials get better and better and better as 2023 goes along, and you start to see those margins improve rapidly, revenue improve, profitability, everything across the board, right? And I'm convinced that this year for Honest will be like 2019 was for Elf, and it'll be a real turning point year, right? And I'm starting to see a lot of their product in a lot of big stores. Walgreens, this is from Walgreens. I love it when one of my stocks has one of my stocks in it, okay? Walgreens is one of my dividend stocks, and they got a beautiful Honest section. I appreciate one of the members of the private stock group taking this photo here of Honest and Walgreens. That's just a huge opportunity. I mean, Walgreens has thousands stores across, obviously, the United States of America alone. And think about all the traffic all those stores get. And just having a great Honest display there is tremendous. So that's just a huge win for Honest overall there, right? Honest has baby clothing as well. I don't know how many folks know that, right? But Honest has baby clothing, and this is a private group member snapped this photo from inside Dillard's. That's like a product. Like, they have so many different products. Sometimes it's hard to even remember all the products they have, right? This is from Rochester, Minnesota Target here from one of the private group members. Took some photos. I love, by the way, this Target I love, because look at the Honest section right next to e.l.f. section. Right next to the e.l.f. section as far as cosmetics. And e.l.f. section gets crazy traffic. So, I wish all the Targets were like that, where Honest was right next to e.l.f., because I'm just telling you, there's a lot of traffic that happens there, okay? By the way, Honest price points are above e.l.f.'s price points, okay? They're going for a little more of the high end versus e.l.f.'s going for just like crazy volumes, okay? And here's all the different like soaps, lotions, conditioners, stuff like that, all Honest there. Obviously, Honest diapers, huge section in Target. Like, Target's always the biggest player. These are some of my personal photos from a Target here in Las Vegas recently. And this is the Honest section here. This one's not next to e.l.f. because in this particular Target, like, e.l.f. gets its own massive epic section at this particular Target, because like I said, it just does crazy volumes, right? But yeah, so I mean, this is just phenomenal to see. And you might see this and it's like, it's not a lot of space, right? But imagine what it can be, a few years out. I remember when I first invested in e.l.f., e.l.f. had little sections in Target stores. Now they have among the most products of any cosmetics company in all of Target stores. And so you just got to understand, like, for these companies that do a great job with their brand and growing their customer base, they'll get more space over as time kind of ticks on there, right? This is the diaper section. Like, look at how much just diaper section Honest has at this point in time. I can tell you, when Honest first got into Target, it wasn't like this, okay? They got this way because they did volumes. And so the same thing will happen with cosmetics and the beauty products, which obviously are very, very high margin. This is all the Honest products kind of in this area, right? Soaps, lotions, conditioners, baby wipes, all those sorts of things. So just tremendous opportunity. This is actually a Nordstrom rack I went into this weekend. And by the way, once again, another one of my companies owning, it has another one of my companies in it, right? Because I own Nordstrom as well. But, to see Honest here, I'm like, Nordstrom, can we order some more product here? Because we're a little low on product here, baby. Let's order a little bit more. But it just goes to show you the presence that Honest is starting to get across the United States of America now at this point in time. And it's such a tremendous opportunity. And this is the beautiful thing about the makeup business, right? The cosmetics, the beauty business, is it's recurring buyers, right? And it's like, you use a moisturizer, let's say as a beauty product, you got to go buy that moisturizer again in a few weeks or a month when it runs out, right? You wear a mascara or whatever it is, right? You got to go get a new one. You got to go get a new one. You got to get a new one. It's a recurring, the lifetime value of a customer in the cosmetics industry can easily be hundreds of dollars, but many times it's thousands of dollars in terms of lifetime value. I got to do a full lesson for the private stock group at some point in the month of March, just running through lifetime values of customers, right? We did a whole live stream yesterday with myself and the private wealth group members and whatnot, talking about some very important subjects, but I want to do one in the month of March for just running through lifetime value of customer and how much it can change for a business model over the long term. By the way, if you're looking to apply to join my private stock group, my private wealth group, they'll be in the description area down there. So, tremendous opportunity. We'll see how it plays out. I could be wrong, but, it's so similar to e.l.f., it's not even funny. And just like seeing the kind of decline of the stock price and seeing kind of what I think is going to transpire there, it's crazy, okay? Zuckerberg, this was front page news on CNBC here today, okay? Mark Zuckerberg announced his new team at Meta working on artificial intelligence products for Instagram and WhatsApp. The thing about this was, I'm like, I don't understand. This shouldn't be new. Like, at Meta, Zuckerberg's had people working on AI for quite some time now. So I don't know why this is front page news on CNBC. Like, I don't get it. I literally don't get it. They've been working on this. If you're somebody that's an investor of Meta and you follow the company on a high level, you know they've been investing in this for quite some time, a significant amount of time in terms of artificial intelligence. So I was just surprised to see that as like front page news. I think it's just because everybody's talking about AI right now. So if you say anything AI related, right, it's like front page news right now. It's a very, very weird climate in regards to the whole AI game, but I'm just like Zuckerberg and the team has been working on AI for a while. They've been spending aggressively there. In terms of their spend, people think it's just they're spending on metaverse. No, they've been spending a lot of money on AI before everybody was talking about AI, okay? So that's interesting. I saw this, okay? So everybody kind of getting excited here because there was like a rush of buyers kind of for the home buying market, right? In January, numbers looked like very impressive. They were talking about it's the best numbers since like June of 2020, right? Signed contracts on existing homes jumped 8.1% from last month, which from my understanding was the biggest like increase since, June of 2020, right? And so you saw Toll Brothers numbers. They got better and better as the year ticked on, or excuse me, not as the year ticked on, as the last quarter ticked on. Like October was the lows, then November got better, then December got better, and then you see these January numbers, and everybody gets real excited. Or excuse me, for Toll, I think they actually did November, December, January, if I recall. Yeah, it was November, December, January, right? And so you're seeing these numbers, and a lot of people are getting excited, and like maybe the bottom for housing's in, right? Just slow your roll on that a little bit, because here's the deal. Since February started, interest rates have been skyrocketing again, okay? And so if this trend continues, I can tell you February numbers are going to come in weaker, and then March numbers are going to come in really, really bad. And the spring selling season will not be the excitement that a lot of folks are kind of hoping for in that situation. I think the thing that still has to give here, okay, especially if mortgage rates continue to climb back up to those 8s numbers, right? The thing that has to give is pricing. Pricing has to give. Pricing has to give. Prices have to come down, throughout the country, and especially a lot of these markets. I'm looking at it and like pricing just has to give at some point in time. It's either you're going to sit with your house on the market for a long period of time, or you're going to drop price. And I see a lot of delusional sellers still. I'm telling you, like out here in Vegas, a lot of delusional sellers. I see a lot of these homes just sitting on the market month after month after month after month, and they're trying to make these little price moves down. It's like, dude, you want any chance to sell a home in Vegas right now, you better drop substantially on your price, okay? I mean substantially. If you think, there's a very small pool of buyers out there right now. If you think you're going to sell a property right now in Vegas or Phoenix or, many of these markets that were very, very hot, I'm just telling you, it's not going to happen unless you're super, super aggressive on price. And even if you are, by the way, it still doesn't guarantee you're going to sell that baby. But I just see a lot of delusional buyers. So at some point in time, pricing is going to give here, and that could be a good thing for housing overall. Once if the perfect dynamic would be sellers get more realistic around pricing and realize they're going to have to drop price. So as the spring ticks on, they start to drop price to move a home, right? And throughout the summer, right? And then we see mortgage rates start to come back down, maybe starting late spring, early summer. And so then you have a dynamic where prices are dropping and then mortgage rates start dropping. And I can tell you that would maybe at least give us a chance to maybe bottom out housing at the end of this year or at the beginning of 2024, like the first half of 2024. That would give us a chance. If that doesn't happen, like this is just going to continue to be a market that's just kind of like a fake you out. And 1 month it seems like, oh, things are great, and then you get kind of slapped in the face and it's like, no, housing has not bottomed yet, right? No. This week's very interesting, right? And I hope you guys are ready to rock and roll. Because I have some stocks reporting, and these are the stocks I'm keeping my eyes on, right? Obviously, I'll keep my eye on everything, but these are stocks I'm mainly focused on here. Target is a dividend stock for me. I hope it drops. I hope they have bad earnings. I want it to drop because this is a small dividend position for me. I want to build a lot larger. And so this is one of those stocks I want to add this whole year. So I'm hoping they just come in with bad numbers. I don't know, just bad. Just go down, okay? That's all I'll say about that. Lowe's, I think, is interesting to pay attention to. That Lowe's and Home Depot are really going to tell you how the housing market's doing, okay? Pay attention to Lowe's numbers. After the close on Wednesday, Salesforce and Snowflake, I think, are going to be very, very interesting here. Salesforce, that's another one I'm hoping drops again. They've kind of bottomed out, obviously, over the past couple months. I'm hoping it drops. Great company, actually for finally an attractive valuation. It's been quite some time. And so I'm hoping that one drops. Love to kind of get a position rolling there. Snowflake, I'll be keeping my eyes on because a lot of people throw Palantir into the competitive space with Snowflake, although, that's debatable, right? Celsius might keep an eye out there. That one did fall quite substantially a while back, so maybe I'll just keep an eye out there. Best Buy is important for me, okay? The reason Best Buy is important for me and the reason I'll pay attention to Best Buy numbers in whatever their guidance is for this upcoming quarter, the reason I'm going to pay attention to that is Corsair, okay? Corsair, obviously, they have a ton of products in Best Buy. On the gaming side and on the Elgato side, the streaming, like Elgato has its own nice section in almost all Best Buy stores. If you've ever been at Best Buy, I'm sure you've seen it, right? All their different cameras and microphones and the stream decks and everything like that. So definitely going to pay attention to that. Kroger, I will keep an eye on Kroger. And the only reason is I want to hear what they have to say about inflationary pressures and specifically moving forward in 2023. I don't just want to hear about the last quarter, but I really want to hear what they have to say if they're starting to see, prices easing, the rate of increase easing, those sorts of things. So I'm going to keep an eye on Kroger. It's the biggest grocery store chain in the United States of America. You really want to know how inflation's doing? Pay attention to Kroger numbers, okay? Portillo's, certainly not my favorite restaurant stock. I like Texas Roadhouse a lot better, but I kind of put them into the Dutch Bro category where I'm keeping an eye on it, and at the right price, I could make a move there. Costco, going to pay attention to Costco for similar reasons that I'm going to pay attention to Kroger numbers. Nordstrom is a dividend stock I do own. Nordstrom, I'm kind of hoping it probably goes up. I'm not really looking to build out Nordstrom to be a bigger position. I'm already have a really good sized position there in the dividend account. So I'm kind of hoping it goes up, if anything. But at the end of the day, it doesn't really matter because even if it goes up, I'm not selling it because it's a dividend play. It's just for cash flow, right? So, it is what it is. That one, I guess it doesn't really matter, but I will pay attention to earnings and kind of see what they have to say. If they made some huge downward move, then in that situation, I might have to pick up some shares in regards to that one, okay? Now, in regards to the market overall, okay, I will tell you, right now we're in a little bit of no man's land in this market. A little bit of no man's land in this market right now, okay? And the reason being is we don't have on the bullish side and the bearish side. I feel like I'm going to sneeze. Thank you. Bless me. Thank you. On the bullish side, what do we have to go off of? Well, we have to go off of, we had inflation going our way, but then this past month, it hasn't really been going our way, right? Real estate was showing some improving numbers, but now real estate could easily show worse numbers now that mortgage rates are going back up. We had the Fed starting to ease in terms of the rate of increase, just 25 basis points, but now all of a sudden the talk is 50 basis points, right? So for us bulls, I think in the short term at least, we don't have a lot to go off of right now, right? But I think the bears also don't have a lot to go off of right now. And this is what creates this no man's land dynamic in the market right now. Because as a bear, you say, yes, inflation's, I don't want to say going back up, but the inflation numbers are coming in hot right now, right? Which is good because we had seen kind of, if you're on the bearish side, the numbers were kind of disappointing because it was looked like inflation was coming down and down and down. Then you had this past, January, which was a hot month, and everybody's kind of looking at it and thinking, oh man, maybe inflation's going to get back. But you had 1 month. You need to get at least 2 or 3 months together to feel like inflation's going to go back up, and in terms of like the rate of increase, and we're going to have super sticky inflation. You can't just, we already got the market down quite substantially just in the past 2 weeks roughly from essentially where the market was at roughly 2 weeks ago, right? Based upon those kind of inflationary reports. So you don't have a lot to go off of there. And at the end of the day, you can say, well, Fed might have to raise more aggressively. They might do 50 basis points next time instead of 25 basis points. At the end of the day, at this point in the game, it's not a big change. Okay, it's a change, yeah, but it's not a big change. Not when you're already getting close to 5% now at this point in time, right? As the numbers get bigger, it's like 25, 50 basis points. It's pretty much almost the same thing. When you're first starting to raise rates, that's a big difference. But at this point in time, it's really not. And earnings have come in pretty respectable this entire earnings season. This was one of those earnings seasons that bears thought, everything was going to tank. Earnings going to be horrible, and it's like you just go through these companies, especially a lot of the big dogs, and it's like it's not that down and out. And also, a lot of these companies are going to be in a position where the earnings per share and net income could actually increase as 2023 goes along. And so, as a bear, you don't have a ton to go off of, and that kind of creates this no man's land dynamic in the market right now, where the bulls don't have enough to go off of to really start the next major bull cycle. Now at this point in time, the bears don't really have enough to go off of right now to send this market down to new lows. So they're in kind of no man's land right now, and I think we're going to continue to be there unless all the inflation numbers that come out next month, If all those inflation numbers come out super hot again, then we could make another big move down in the market, because then everybody would start thinking, oh my gosh, the Fed's going to have to go back to 50 or maybe 75 basis point moves, maybe several times. Maybe we're going to have to take Fed funds rate to 6 or 7%, right? Everybody will start to run. But if inflation cools again, then you can start getting a little bullish activity later on in the month of March. If inflation numbers cool, everybody starts to kind of say, oh, yeah, that was just a freak report we had there. Inflation is on the right trajectory. The Fed's not going to have to be as aggressive as some folks thought, and earnings could come in decent. And so then you can start maybe a little bullish cycle again there. But for the short term, we're in no man's land, okay? Hope you guys enjoyed today's video. As always, I appreciate every single